Joining me now to look ahead to the auction and what it could mean for the world, Christoph Rieger, head of fixed income for Commerzbank. Christopher, thank you so much for speaking to us. We appreciate your time. So, as we've been saying, the focus of the market's very much on the Portuguese bond issue later today in a couple of hours' time. In fact, what are your expectations? Will the auction go well?
Yes. At the end of the day, certainly both auctions will be fully covered. It was clear that January would be a very crucial month for EMU with peripherals returning to the market, and we've been saying all along that this test, however, will be passed at the end of the day or end of the month, so triggering some sort of at least temporary relief then possibly in coming days, maybe even weeks.
I guess the key word there that you use is temporary, because many people are saying, well, even if we see a successful auction, it doesn't mean anything because rates north of 7%, which is where they've been, simply isn't sustainable.
Yes, that is true. Certainly Portugal can afford to pay these sort of yields at one auction or a couple of auctions, maybe even a few more. But certainly they won't be able to fund all of their 20 billion they'll have to do at these sort of levels. This would be unsustainable. So therefore, the problems certainly will linger on in the medium term.
So what are you saying, that effectively bond markets will continue to push yields higher and higher until the country is forced to accept a bailout? When might that happen?
Well, it's certainly not a one-way street, and we have certainly some helping influences right now, not least the ECB, which is obviously much more active in weeks like this. Also demand from the likes of China, Japan of late, saying something in that direction, Brazil possibly. So this may add to the sort of relief that I said we're likely to see now in coming days. Also, we have large coupon payments from Spain and Italy at the end of the month. So all of this could add to some sense of relief. However, as we've seen time and again during this crisis, the solvency issues facing some of these countries certainly won't go away as quickly, and thus the risk is real that tensions will reemerge, and it requires probably a more comprehensive solution from all the policymakers involved to really bring about a more sustained spread tightening than in the long run.
It's great to get your thoughts, Christopher Rieger, fixing strategist for Commerzbank.